The oil market is facing another round of sell-offs. The ruble was losing ground in the morning trade following a slump in crude prices. Currency interventions held by the Bank of Russia support the ruble and keep it from falling lower. Brent crude extended losses by 5% in the early trade, but then eased the pace of decline. Brent oil futures for June were trading at $22.15 per barrel in the first half of this day. On Monday close, Brent lost 7.7% of its value. Meanwhile, North American grade is trading deep in the negative territory. WTI dropped 20% lower in the midday and settled at $10.30 per barrel. The huge imbalance between growing supply and rapidly decreasing oil demand caused by the coronavirus restrictions continues to heavily weigh on crude prices. Experts warn that the coronavirus-driven recession may become the worst in history. What's more, market participants are worried that oil storage facilities may be filled to the top very soon. According to Goldman Sachs, the world can run out of storage capacity in just 3 or 4 weeks. By the end of this week, the new OPEC Plus deal on output cuts comes into force. Some private drilling companies have begun shutting down their wells in the U.S. Gulf of Mexico. The number of active oil rigs in the United States has reduced by almost a half since March 13. However, traders still doubt that the introduced cuts in production will be enough to stabilize the energy markets. Oil traders will be also waiting for the official industry data, which is due on Wednesday. The bears will be able to enhance their positions if the crude inventories growth rate in the United States remains unchanged. Oil is likely to stay in a bear market until June, when major oil producers will again raise the question of reducing the output. The ruble is holding steadily strong despite the uncertainty in the oil market. In the morning trade, the ruble retreated against the US dollar, but later managed to regain ground. The dollar-ruble pair was trading at 74.20 in the mid-session, having eased by 0.39%. The currency interventions carried out by the Bank of Russia help keep the ruble afloat, but such negative factors as ending of the tax payment period and falling oil prices may stop the ruble's uptrend. In this case, the dollar-ruble pair is expected to settle near the level of 75.00 or above. According to the technical factors, the pair is set to form a symmetrical triangle platform on the daily chart. The statistics indicator signals a good moment for opening short positions. However, we can see that the pair has been oversold. This means that the US dollar is about to stop its downtrend against the ruble. In the short term, the ruble's trajectory will be mainly determined by the situation in the oil market and risk appetite. Investor sentiment was slightly improved following the recent meeting of the Bank of Russia. This may override the negative forecast and support the Russian currency in the near future. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.